The world is changing. Artificial intelligence is no longer a futuristic fantasy. It's here and it's changing everything, but AI needs power. It needs serious computing power. That's where CoreWeave comes in. They're in the business of providing that power. Think of them as the landlords of the AI revolution. And now they're going public. This is big news. CoreWeave's IPO is a sign of the times. It shows how important AI has become. It also shows that investors are betting big on the future of this technology, but like any investment, there are risks. We'll look at CoreWeave's financials, we'll examine their relationship with key partners, and we'll weigh the potential rewards against the risks for savvy investors. CoreWeave wasn't always an AI powerhouse. In fact, their journey began in a completely different industry. They started in a very different world. Cryptocurrency mining. This was a time when digital currencies were just beginning to capture the public's imagination. Back in 2017, Bitcoin was all the rage. The cryptocurrency market was booming and everyone wanted a piece of the action. CoreWeave saw an opportunity to leverage their technical expertise. They realized that mining cryptocurrency required massive computing power. This was a niche they could fill. So, they built a business around providing that power. They invested heavily in infrastructure and technology to support this growing demand. But then, the crypto bubble burst, the market crashed, and many mining operations went under. But CoreWeave adapted. They didn't see this as the end, but rather as a new beginning. They saw another opportunity on the horizon: the rise of AI. Artificial intelligence was the next big thing, and it also required enormous processing power. CoreWeave was perfectly positioned to fill this need with their existing infrastructure. They had the technology, the expertise, and the vision to pivot their business model. This strategic shift allowed them to stay ahead of the curve and continue growing. This laid the groundwork for their current success and their ambitious IPO plans. CoreWeave's journey from crypto mining to cloud computing is a remarkable story of innovation and resilience. CoreWeave recently filed for an IPO. They're aiming for a valuation of $35 billion. They'll be able to expand their operations, invest in new technology, and they'll be able to attract top talent. Several major banks are underwriting the IPO. These include Morgan Stanley, JP Morgan, and Goldman Sachs. These are some of the biggest names on Wall Street. Their involvement is a vote of confidence in CoreWeave. The IPO is expected to happen soon. It could be as early as late March or early April. Investors are watching closely. They're eager to see how CoreWeave performs on the public market. CoreWeave is a rapidly growing company making waves in the tech industry with its innovative solutions and aggressive expansion strategies. Their revenue has been skyrocketing, reflecting their successful market penetration and customer acquisition. In 2023, they brought in an impressive $1.9 billion, a testament to their robust business model. That's a staggering 737% increase from the previous year, showcasing their exponential growth. They're expecting even more growth, with ambitious plans to expand their impressive market reach and product offerings. They're projecting revenue of $8 billion. That's a bold prediction, but one that aligns with their current trajectory. Given their track record of surpassing expectations, it's not entirely out of reach. However, CoreWeave isn't profitable yet, as they continue to reinvest heavily into their growth. They're still in the investment mode, focusing on scaling their operations and enhancing their technological capabilities. They're spending heavily to grow their business, which is a common strategy for young, fast-growing companies. This approach, while risky, is aimed at capturing a larger market share and establishing a strong foothold in the industry. But it's something that investors should be aware of, as it impacts the company's short-term profitability. CoreWeave also has a significant amount of debt, which they've taken on to fuel their rapid expansion. Their interest expense in 2023 was $360 million, a substantial figure that reflects their borrowing. This debt could become a burden if interest rates rise, potentially impacting their financial stability. It's something that investors will be watching closely, as it could influence the company's future growth and profitability. Section 5, the Microsoft conundrum: customer concentration and its implications. CoreWeave has a big customer, Microsoft. In fact, Microsoft accounts for a whopping 60% of their business. This is a double-edged sword. On the one hand, it's great to have a major player like Microsoft as a customer. It provides a steady stream of revenue. But on the other hand, it makes CoreWeave heavily dependent on a single customer. What happens if Microsoft decides to go elsewhere? What happens if their relationship sours? These are serious risks that investors need to consider. There have been some reports of friction between CoreWeave and Microsoft. Some say that Microsoft is unhappy with CoreWeave's performance. They claim that CoreWeave has missed deadlines and had delivery issues. CoreWeave denies these claims. Section 6. The Nvidia factor, a symbiotic relationship with risks. CoreWeave's business relies heavily on Nvidia. Nvidia makes the GPUs that power CoreWeave's servers. These GPUs are essential for AI workloads. CoreWeave is one of Nvidia's biggest customers. They spend an estimated 42% of their budget on Nvidia products. This close relationship is both a blessing and a curse. On the positive side, it gives CoreWeave access to cutting-edge technology. Nvidia is a leader in the GPU market. They're constantly innovating and releasing new products. This ensures that CoreWeave can offer its customers the latest and greatest hardware. However, it also makes CoreWeave vulnerable. What happens if Nvidia raises prices? What happens if Nvidia experiences supply chain issues? These are real possibilities that could negatively impact CoreWeave's business. CoreWeave was founded by a group of entrepreneurs with a vision. They saw the potential of cloud computing early on, and they've been riding the wave ever since. The founders have a significant stake in the company. They recently cashed out some of their shares in a secondary offering, but they still retain around 80% of the voting power. This means that they're still in control. They're the ones making the decisions. This can be seen as a positive or negative, depending on your perspective. Some investors like to see founders with skin in the game. They believe it shows commitment. Others prefer a more diversified ownership structure. They worry about founders having too much control. Section 8. Future innovations and strategic vision. CoreWeave is not just resting on its laurels. The company has ambitious plans for the future. They're investing heavily in R&D to stay ahead of the curve. One of the most exciting areas they're exploring is the integration of AI and machine learning into their cloud services. This could revolutionize how businesses utilize cloud computing, making it more efficient and adaptive. Another key focus for CoreWeave is sustainability. They're committed to exploring the use of renewable energy sources to power their data centers. This appeals to a number of eco-conscious investors and clients. CoreWeave is also expanding its global footprint. They're setting up new data centers in strategic locations around the world. This will help them serve a broader customer base and reduce latency issues, making their services more reliable and faster. The company's strategic vision is clear: to be a leader in the next generation of cloud computing. They're not just looking at the present, they're planning for the future. And this forward-thinking approach could be a significant advantage in a rapidly evolving tech landscape. Section 9. Weighing the odds, investment potential and risks. So should you invest in CoreWeave's IPO? That's the million-dollar question. It's a decision that requires careful consideration and a deep understanding of both the potential rewards and the inherent risks. On the one hand, CoreWeave has a lot going for it. The company is positioned in a rapidly growing market, which is always a positive sign for potential investors. They're in a hot market. They're growing rapidly. Their growth metrics have been impressive, showing a consistent upward trend, and they have strong partnerships. These alliances can provide stability and open doors to new opportunities. On the other hand, there are risks. They're not profitable yet. This lack of profitability can be a red flag for some investors. They have a lot of debt. High levels of debt can limit a company's flexibility and increase financial strain. And they're heavily reliant on a single customer and supplier. This dependency can be risky if either relationship sours. Ultimately, the decision comes down to your individual risk tolerance and investment goals. Are you willing to take on higher risk for the possibility of higher returns? If you're comfortable with a high-risk, high-reward investment, then CoreWeave might be worth considering. The potential for significant gains is there, but if you're looking for a safer bet, you might want to wait and see how things play out. Sometimes patience can be a virtue in investing. Do your research and make informed decisions. Knowledge is your best tool in navigating the complexities of the stock market. Thank you for watching. If you found this video insightful, please give it a thumbs up. Your support helps us create more content like this. Don't forget to subscribe to our channel and hit the notification bell so you never miss an update on the latest in tech and finance. We'd love to hear your thoughts. Leave a comment below and let us know what you think about CoreWeave's IPO. Are you planning to invest, or are you taking a wait-and-see approach? Stay tuned for more in-depth analyses and updates. Until next time, happy investing.